Has been flipped. It's not only the start of a new week, but also a new month, one that historically has not been good to investors. But this June got off to a pretty decent start. The Dow Jones Industrial Average today gained nearly 30 points to close at 18,040. The Nasdaq rose about 13 points, and the S&P 500 was up 4 points. So, should investors expect a June swoon or surge? Because if history is any guide, the bears will be in control. Dominic Chu has more.
The broader large-cap stock market managed to polish off May with marginal gains. But history suggests we may be in for a bit of a June swoon. That's because June has typically been one of the worst months for stock market returns. According to market data and analytics firm Kensho, on average over the past 10 years, all three major U.S. stock indices have posted losses during the month. The Dow Industrial Average has finished lower in 8 of the last 10 Junes with an average loss of over 1.5%. The broader S&P 500 has finished lower in 6 of the last 10 with an average loss of about 1.33%, and the Nasdaq Composite has finished lower in 7 of the last 10 times with an average loss of nearly 1%. As for what sector has managed to do the best during this time period, try the S&P Utilities, outperforming up an average of 1.33%, and it's posted gains in 6 of the last 10 instances. As for the worst performing sector, the industrial one, with an average loss of nearly 2.5%, and it's been a winning trade in only 2 of the last 10 years. The stock market remains near record levels, but for those who are looking for a reason to possibly lighten up on stock exposure, recent history might be a factor to consider. As usual, past performance doesn't necessarily translate into future performance, but many traders look towards history for patterns to help them play the odds. For Nightly Business